Hello and welcome to a CMS Forex Daily Video Recap. I'm your fundamental market analyst, Nick Nassad. Today is Wednesday, October 6, 2010. While overnight we saw stocks climbing in Asia and Europe, the US session came up against some weak data in the form of a jobs report showing that private companies shed payrolls in September. The reading strongly undershot expectations, and it could mean that the September non-farm payroll report due out on Friday may be weak as well. What it does do is increase the speculation that the Federal Reserve will undertake some form of stimulus, more likely more quantitative easing, which continues to pressure the US dollar and currency markets. Before the ADP report that had resumed the quantitative easing fears, the euro traded in choppy waters in morning New York trading after a downgrade of Irish government debt and renewed concern over a revised Greek debt figure. After the ADP report, we see that the euro dollar posted a fresh 6-month high, the dollar yen breached a fresh 15-year low, the dollar Swiss franc pair fell to a new record low, and the Aussie US dollar climbed to a 26-month high. Taking a look at that US ADP jobs report, we saw that private sector employment decreased by 39,000 from August to September on a seasonally adjusted basis, with all the major sectors showing a deceleration in employment. The decline in private employment in September confirms a pause in the economic recovery already evident in some other data. It's also the first decline in employment in 8 months, though the average monthly gains between February and August have been a pretty tepid 34,000, which means that there is not that much momentum in the labor market. Jumping to our market highlights now, let's start with the US dollar Japanese yen pair, which benefited from the weak US report and breached a 15-year low, moving the pair below the levels we had seen where the Bank of Japan intervened in mid-September. It looks likely that there won't be any intervention until we get down to perhaps the 82 level, but even then it may be tough for Japanese authorities to intervene this week ahead of the weekend's IMF meeting, where all the finance ministers will be meeting. In a look at the euro-dollar pair, with the continued theme of US dollar weakness evident in today's trading, we see that first we consolidated some of the gains we had seen yesterday's session, but then in the New York morning session, we see that we broke above our resistance, daily resistance at 1.3875, pushing above the 1.39 level. We now await the ECB meeting tomorrow and Friday's non-farm payroll report to see if the pair continues its strong rally. There may be some concern that the pair may be overbought at this point, but with the Fed set for more quantitative easing, it may be hard for the greenback to reverse its recent losses. As we can see, we used the 1.38 level as a very good level of resistance turned support as we tested following the ADP report. While we did have some negative news bearing on the euro in terms of the financial markets, we did have a positive fundamental report as Germany's factory orders surged 3.4% in August, almost 4 times the figure expected. The sharp rise was propelled by strong export demand, especially for big ticket items like capital machinery, which rose 6.7% on the month and was up 23% in the euro region alone. Domestically, however, orders were actually down 0.5%, so we can see that the increase was led all by exports. Factory orders do act as a leading indicator for the economy, and today's release shows that the German manufacturing sector is poised to have a strong end of the third quarter. Taking a look at the euro-pound pair, we see here too the euro gaining and moving above its open for the week, which was the high for the week at 0.8730. We came to test the 0.8750 level. As we can tell, we retraced 38.2% of the rally from last week in this pair, using that level as support, 0.8630, and now we see the euro continuing to climb. If we zoom this pair out a little bit, we see that in mid-September we had a very important change in the pair's preference as we pushed above this resistance level at 0.84. That was around the same time that it became more clear that the Bank of England was gearing up for more quantitative easing of its own, and that helped the euro to gain on the pair. If we take a look at the pound dollar now, we see that in overnight trading we tested our highs from yesterday at around 1.5935, but fell back down in European trading. We do have the Bank of England meeting tomorrow, and the Monetary Policy Committee is considering whether to restart bond purchases, or aka quantitative easing, with the Bank of Japan already announcing new steps and the Fed preparing its own new round of stimulus. The Bank of England may follow as well. That event risk therefore was weighing on the pound, though we did see the pound pairing its overnight losses in the New York trading against the dollar, as the weakness around the US dollar is stronger than it is around the pound. Shifting to one of our global growth linked currencies, the Australian dollar US dollar, we see that it moved above its recent resistance at 0.9730 but also 0.9750 to set a new 26-month high in this pair just below 0.9780. We see that in the early New York trading, we did move back down, paired some of those initial gains to retest this level of resistance as support, and that support has held. With the major central banks gearing up for more quantitative easing, the Australian dollar looks very attractive and has been rallying strongly this past month. Even though the RBA held rates steady in its meeting yesterday, the interest rate differential favors the Aussie, so we'll see if it can continue this pace of gains heading into the rest of this week and following the non-farm payroll report. The US dollar Canadian dollar also moved in favor of the global growth linked currency, the higher yielder, the Canadian dollar, and against the US dollar. As you can see, we moved strongly past the 1.0150 support level that we had set up in yesterday. We retested that level following the ADP release as it increased risk aversion slightly, but then following a very strong release from Canada, the IVPMI, which saw a reading of above 70, we see the Canadian dollar gaining strongly, moving past 1.01 barrier as well. Zooming this pair to a daily time frame, we see that in today's trading we have pushed below our lows from early August. So we had been confined to this trading range throughout most of the summer, and we look like we are breaking below that level. So a test of parity therefore becomes our next level of support, and we have actual support from the middle of April at around 0.9950, so just below the parity level. At the top of the broadcast, we looked at the dollar-yen pair, two currencies usually linked to safe haven. We saw the yen gaining on the dollar. Similarly, in a look at the US dollar Swiss franc, we see that the Swissy continues its gains against the dollar. We had seen the pair break below its parity level 2 weeks ago, and after finding some support in the 0.97 area, we see that we now move below that level as well in the last 2 sessions, and we push to new record lows in this pair, currently at 0.9615 at around 11:30 a.m. Eastern. And so overall we see the broad theme of dollar weakness during today's Wednesday session. Now let's go ahead and take a look at the upcoming fundamental docket. Tonight Australia posts a measure of construction as well as its employment change for the month of September. Overnight Japan posts its leading indicators as well as preliminary reading on machine tool orders, and we get industrial production data from the UK and Germany. Early in the North American session, we do get the Bank of England deciding on interest rates, so that could carry a lot of event risk if we see the Bank of England deciding to expand its bond asset purchase program. Following the Bank of England, we get the ECB interest rate decision, as well as the press conference from ECB President Trichet at 8:30 a.m. In fundamental news from the US, we see the weekly jobless claims as well as a look at consumer credit, while Canada posts a measure of building permits. And that does it for today's daily video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. Tune in today at 3 p.m. to our Charters Corner session, a 1-hour webinar examining the main currency pairs from a technical analysis perspective, also on our website, cmsfx.com. I want to thank you for watching and wish you good trading.